Courtney, the light that you want to shine is $1 trillion, I believe, opportunity you see hiding in plain sight. But how is it affecting working families right here, right now?
Well, I think the opportunity is enormous. It's $1 trillion, as you say, and we see it in kind of three big buckets. So first is the future of inclusive work, making better jobs for women and caregivers across the board in the economy, especially in frontline workers. Also, secondly, thinking about the booming care economy. So a lot of times we think about that as healthcare, but it's also childcare, elder care, certain areas of women's health that are underserved. And then the third area is really thinking about sort of the next wave of financial health and progress for families. And there's an incredible role that tech can play in building in all three of these solution areas, and we feel really excited about the opportunity.
Okay, so what's being built? We see when you go to the website the amount of builders that you shine a light on, some of them women, people of color, and I'm interested as to what they're specifically trying to fix.
Yeah, so some of the founders that we had ringing the bell with us today, I'll give you an example of a company called Wealthy. So Wealthy is building a care coordination layer, and it is sold through employers as a benefit for their employees. So think about if my mom lives in Florida and she falls and she breaks her hip, God forbid. Suddenly I have a lot of work that I need to do, right? Someone needs to call and fight with her insurance company potentially. Someone needs to find the best physiotherapist in town. Someone needs to figure out how to get her a ride there. That's usually the burden that falls to what we call the alpha daughters, or those working women who are in the prime, sometimes called the sandwich generation or the panini generation. And what Wealthy really does is support that caregiver, usually a family caregiver, usually a woman, as we know, and take some of that burden off of her hands, the second shift. And what we find with clients of Wealthy and the end users is that women are far more likely to stay in the workforce. They're far less likely to resign, need to go part-time, or take a leave of absence.
So in this current economic environment, which is such a bizarre one in many ways, where we have an incredibly tight labor market, but we're all worrying about a slowing economy, worrying about companies' desire to be spending on benefits such as this. Where are we in the client security to be paying for companies, startups, and help fuel their growth in this way?
Well, I think that's what I love about being able to ring the bell today. We didn't just have our portfolio companies, we had their biggest clients with us too. We had Merck, we had Oscar, we had AIG, we had Bank of America. These are huge employers, and they don't just employ white-collar knowledge workers in the tech industry, where we know typically benefits have been really generous. A lot of these companies employ a large number of frontline and hourly workers, and they are realizing that in this climate of an extremely tight labor market, when care falls through, people do not show up to work. If you think about the railroad strikes that we just went through this past fall, they were about these care issues, I think, fundamentally. They were about paid leave, paid sick leave, and they were about scheduling and absence management. I really think you don't have to peel the layer back on the onion very far to think about those as care issues. Most people take a sick day because their child can't go to school or to daycare. Right? And so I think that these issues of care and the needs of care workers and also unpaid caregivers, they're really striking at the heart of the American economy right now. And so I feel really encouraged when I think about the large employers, NYSE listed, that we had with us there today, and these young innovative companies. They are committed to working together. I think even in this environment, we are not seeing a pullback on this new and emerging category of caregiving benefits. We think it could be a $10 billion spend by employers in the next 10 years per year.
Well, Courtney, you've taken us to the opportunity, right? Caroline and I have so many venture capitalists on the show that will talk about the IRA, for example, right? The Inflation Reduction Act, and making sure they have portfolio companies that are positioned to take advantage of that public sector spending and all of the kind of wider benefits. But that's all about energy and about electric vehicles. Very seldom are we discussing issues of healthcare or basically what are basic societal needs. That seems to be where you see opportunity.
Yeah, I think we see a huge opportunity, and I'll try an analogy out on you, but I think the same way that we are waking up to the fact that as an economy, we have been addicted to artificially cheap fossil fuels, I think we are also finding through the COVID crisis and beyond that we are also addicted to the artificially cheap labor of women and caregivers. And when we don't value that care, just like when we don't properly value the cost of burning fossil fuels, there are huge economic implications. So BCG just published a report saying if we do not fix the care crisis, both the paid worker crisis as well as the burden on unpaid caregivers, it will cost the U.S. $290 billion of GDP. That is more than a full point of GDP growth by 2030. So there is a huge opportunity. When we think about the IRA, I love this too, we get very excited about green jobs. I'm excited about them too. But for every solar technician that we need to produce in the next 10 years, we need to produce 20 nurses. And so there is a huge opportunity to think about retraining, how to make nursing jobs better, how to apply things like generative AI to really, frankly, pretty mundane and difficult and burnout-related tasks like charting and taking notes and things that we know really drag down the hours of paid medical professionals. So I just get really excited about the opportunity that there is in care. I think there's a great intersection with technology in care, and I think we're frankly at the very early innings here.
So how do you discern which names in your portfolio are going to be disruptive? Talk to us about where you're investing across the startup curve and kind of the time horizon for some of these companies realizing the benefit of your thesis.
So we're a very early stage fund, and I think it speaks to that we're very early in the S curve for, I think, the general pool of venture capital and risk capital overall getting turned on to these issues. And so I feel really excited about the rate of company formation in our thesis. When we started a few years ago, most of the founders we met, frankly, were like me. They were women, they were mid-career, they had met a problem, and they wanted to go and build around it. They were not traditional tech founders. They were not necessarily engineers. Many of them have gone on to build amazing businesses, and living that problem is really powerful. I think what I feel excited about is that as the venture ecosystem starts to churn and get excited about this, as we start to see things like Andreessen Horowitz having a sort of American dynamism agenda, which very much centers some things around care, we're seeing mainstream capital get interested in this, and we're also seeing more traditional profiled founders get interested in this too. We're seeing more engineers, we're seeing more tech talent, we're seeing people who haven't necessarily met the problem, but they have the foresight to see the problem, and they're building for it too because they see that it's a huge economic opportunity and a place to make money. Yeah. It's not just about fixing a problem that they're personally passionate about.
What about the LPs out there? What about the source of funding that you turn to? Have they acknowledged this issue? They acknowledge this problem? They acknowledge that they need to put capital to work here?
They do, yeah. We have an incredible group of LPs, and I feel really proud to call them our investors and to go to work for them every single day, finding great companies. I think that impact capital, traditional capital, frankly, corporate capital, a lot of traditional sources of capital for investment are recognizing that there is a big white space here. It is true, you're pointing out, this is not something which is kind of maybe common on the technology show, but I think that's also an opportunity to make a huge amount of money, is to be able to get in and to see the opportunities before they become really obvious to everyone else.
I tell you what we are talking about an awful lot on the technology show is jobs that are being lost within the technology space, as you just sort of enunciated. And I'm interested as to whether that suddenly means the companies that you back are awash with talent and people are wanting to go and work and fix real world problems, or is that yet to come to bear in some way? Because in many ways, you look at the jobs data, you look at the jobless claims that are meant to be out this week, and we don't seem to be seeing those numbers yet.
Absolutely. I think the war for talent, for the best talent, is always going to be ferocious, and it doesn't really matter where we are in the economic cycle. But I think that there is a larger group of folks who are certainly amenable to switching right now, to joining, and as you say, pursuing something which maybe sits with them a little bit more strongly from a mission and a purpose standpoint, and also which really touches the real economy. I think it's probably a lot of fun to work on building a gaming startup, but it may not have the same kind of reward building something in care infrastructure or the future of inclusive work, or thinking about how do we bring all of these incredible productivity tools we have at work and then do something for families so that we're using something other than a whiteboard and a marker to manage our teams at home.